You gotta love it. Apple adds AI after 13 long years for Siri, which Siri has not seen an upgrade in over 13 years, guys. And the first thing that happens, right after the keynote speech, not missing a beat, they get called out for getting banned out of Twitter by Elon Musk. You gotta love it. You gotta absolutely love it. Where Elon Musk warns that he will ban Apple devices if OpenAI is integrated at operating system level. And first, you may be thinking that's Twitter. You're gonna get banned off Twitter. Apple users will not be able to use Twitter. Nope. It basically said he would ban Apple devices at his company if the iPhone maker integrates OpenAI at the operating system level. And you gotta love the troll. You gotta love the troll. He basically said that people with Apple devices will have to check their phones at the security office, and it's just a gigantic nothing burger, but I thought that would give you guys a laugh there. Apple did reveal a brand new AI feature for iPhones and game changer for the company. They started off with their VPs of skydiving down to the company's headquarters. Gotta come in style. And then Tim Cook basically talked about the AI integration as a game changer and a big step for the company, as OpenAI CEO Sam Altman watched from the audience in California. So again, they're partnering with OpenAI to integrate more and more features. But if you looked at their stock today, it was not too well, right? Not too well. Now, we talk about on this channel a lot about buy the rumors, sell the news. And this is one of those classical things in the market where everyone kind of front runs that news. And when the news finally comes out, it's like, oh, great, take profit. So that's what I think today was. I do believe this is a pullback in Apple, pretty steep one, about 2%. However, it could very easily, with the volatility that we are seeing in the markets, this could be right back up 2% as of the time of recording this video tomorrow morning. I would not be surprised about that. However, we're going to be talking about a couple of things that did evolve from the Weekend Deep Dive till now. So make sure you guys, if you haven't seen it, link down in the description below for the Weekend Deep Dive. It'll give you more insight to some of the levels we're going to be talking about, how we created those levels, kind of the broader picture for the market. That'll give you a little more detail. Today, we're going to be going over very high level. And while you're down there, if you guys wouldn't mind hitting the subscribe button and having bell notifications on, it really helps the channel out. And if you're enjoying this content, throw a like on the video. It lets YouTube know that you enjoyed it and pushes it out to more people. So without further ado, what does this mean for Apple? As you guys know, I cover the 9-day moving average on this channel a lot. It's one of my favorite indicators out there as a bullish bearish sentiment indicator. I don't necessarily just trade off of it completely. As you can see here, we broke down on the 9 and then subsequently pushed up. So we definitely could see Apple continue broadening tomorrow. And we also saw small caps get bid up today. We'll talk about the Russell in just a second, and the indexes as well, along with the VIX. But I do, for all those that did watch the Weekend Deep Dive, we got to cover one thing real quick. And that was that the ECB is totally full of it. ECB President Lagarde, a day after coming out and saying the path to inflation may be bumpy, says interest rates are not necessarily on a linear decline path. There may be periods when we hold after saying if inflation was conquered and we cut rates, right? You got to love them. You got to love them. You just got to love them. Anyway, that's your daily dose of European comedy, as I call it, from the ECB. But more importantly, what is Apple doing? What is Apple going to do? Well, simply, I think if we open above 193.62 tomorrow, which is only a small percentage up, right? Small gap up. I think that Apple will continue and probably buy back 2% of the move. If we close lower and fail to hold that level, then it's simply put, it's an opportunity to look for buying opportunities until the main trend is broken. And we can clearly see that the main trend is from the gap to the latest bottom. We have some price depreciation that can happen, right? We could go all the way down to the low of the day, actually take out the session low, and then approximately another 0.2%. That is where we need to find a bounce. If we go to the 2-hour just to see where this would indicate a little bit better for us, right? We're looking at somewhere at that around that 192, 191 area for a closing price. Again, we can wick down below this level. However, we technically don't want to. We want to sustain prices above it. Now, if we are closing below the level we are now at the close on Monday afternoon, then I'd be expecting Apple to not really push much higher. I would expect a full retracement all the way down to at least 186. for the sole reason that was where we found our previous buying point, where there was fervency to buy Apple. Now, if you're looking to take advantage of this with options, we also are going to start including that in these videos. So I'm going to pull up the Apple implied volatility. We're going to talk about it. And I'm going to kind of give you an insight of what I'll be looking if you're going to be looking at options for this. So here, guys, we have Apple's implied volatility, where for all those that don't know what implied volatility is, it's basically the number one metric when trading options. It's the thing that will move your option contract more than anything else, excluding delta. Delta is basically the Greek that moves your option contract value based on the underlying, which is the stock itself, how much it actually moves. So you got two forces. Usually when selling options, which is what I recommend most people to do, I don't recommend to go on the buying side of the option scale. I would look at implied volatility and look at, okay, if I have a direction I'm thinking, right? Apple's in an uptrend. Is this a good point to sell puts? I would argue no, because the implied volatility is contracting, as we can see here, and it's not at historically high levels. I really want to be up in this 50 to 40 implied volatility rank level. Whereas I'm not really going into earnings, that earnings is around 82 or higher, or really these high volume days. I want basically to be somewhere around 50, even though I get a spike in volatility afterwards. I'm still protected generally in that, because those larger expansions of volatility don't necessarily hold, and therefore if the direction continues, I get advantage of the delta along with the implied volatility. If I was looking to enter a position, I may be looking, again, going back to that level on the market, where we're going to basically be looking at, okay, if this trend line breaks and we come down to this level, let's say the 190s or the 186s, implied volatility is naturally going to go up because the stock is moving pretty heavily. And then I'd be looking to sell puts at that point, or sell spreads in order to profit off of the reverse delta move, kind of doing a contrarian view to the market or the price action, and then pushing higher. And then I'm going to go into one thing that I'm seeing in the markets, that why I'd be betting bullish, right? Even though Apple's price action right now isn't the greatest, I'm still going to be betting bullish for one simple reason, and that is the net speculative positions are added again, right? So I didn't cover this on the weekend deep dive, and my deepest apologies to you guys for that, but net speculative positions double down and go again net short. After going long for a short period of time, we've been seeing them oob and ah around that 20K to zero mark, and now they just flat out went to 65K contracts. Again, this is more bear fuel to push the market higher, because these guys have been wrong over and over and over. Again, I have my bearish theories on this channel. I share with you all the time about the inverted yield curve, the economy. We talk about this, but we have to separate the economy and the stock market to do two different things. And these bears cannot do it. They're basically going emotionally. They're shorting this as the market's pushing higher, and there's no evidence, right? There's no evidence that Apple's broken its trend. There's no evidence that we're going to jump over to the market, right? That we're going to see in the market. We are nowhere near our point that I was saying in the weekend deep dive, which is the white lines, 351 and 330. We're not anywhere near. The market's pushed 0.3% today, and we are close to breaking to another new all-time high. Now, going into CPI, I wouldn't necessarily put any large positions on, because it's a catalyzed event. I'd rather play the reaction. Again, if CPI comes in bullish with Powell, this definitely could rocket the market up 5-10%. We've seen crazier rallies from the market, or completely crap us all the way down. Again, I'm waiting for those catalyzed events to play itself out. And also that's why I wouldn't be playing Apple right now, because the risk to reward is not there in my opinion. Implied volatility, as we showed, is not where it necessarily wants to be. And that's not advantageous for selling, but it's also, if we go back to it real quick, we can clearly see that the implied volatility is not at a low point where the implied volatility will appreciate significantly based on historical trends for the debit side, right? If you're buying the contract, you really want a low volatility. So right now, Apple's in a no man's land for the options market, because neither side really has a cutting edge into it. And thus, I lean towards more of a sit and wait kind of see, on top of going into a catalyzed event, right? So those things stacking up for me, I'm like, personally, I'm not going to do it, right? Looking at the markets, I'm looking more bullish. That's why I'm going to be selling the put side going for Apple if I had to play it, or participating more in the selling side for the market. If we look at the NASDAQ, similar story where we're basically very, very close. We're actually, if I take a line here, 0.2 away from a new all-time high. So again, these bears have shorted 65K contracts as we were heading up during the last week, and we're heading up higher. So again, this is going to be more fuel to push us higher as things evolve, right? And also, last but not least, we're going to cover Bitcoin, right? I've been saying that this is a pretty bearish pattern. Today, we again confirmed failing to break out of that wedge again, and we're looking more like that 65K is coming back into play. So there's a lot of signals from the market that are like, okay, well, I'm seeing bullishness and I'm seeing bearishness. There's clear bearish fuel to push us higher, and also some other news catalysts that we're going to be talking about in just a moment here. On top of this positioning here, we also have Lagarde coming out. The Fed saying May 5-year ahead expectation inflation at 3% versus 2.8, so slight increase in inflation expectations, and thus that affects how people actually transact. We also have fear and greed sitting at neutral again. Surprisingly ticking up a little bit, but I'm still surprised how neutral we're staying with this market pushing. Again, this combined with that bear fuel is signifying to me that we have a lot more room to go higher, especially with these bears and how they're acting, right? Again, watch the levels and look, if Apple does not break this trend line here, then guess what? It's not coming back down to 181. It's not coming back down to 170. So stop saying that it's going to be coming back down there until you have evidence that it does so. It could definitely pull in NVIDIA if we go to NVIDIA after its big gap earnings. And again, that's a bad tick, guys, so don't pay attention to that. But I did want to show, I want to find it here where NVIDIA basically did something similar, right? So until it violated the trend line, that's when it severely went lower. So we got to see if Apple does something similar. And if you guys wouldn't mind, how about you stop by the live stream on tonight at 7 p.m. Eastern, where we're going to take your ticker requests. We're going to be going over the news, the CPI discussion, and everything like that. So you can, we'll talk more about Apple, right? We're going to be talking more about this pattern. So if you're interested, 7 p.m. Eastern, link down in the description below. So make sure you guys stay tuned for that. And thank you all so much for watching. And I hope you have a wonderful time.